Hey, what's up traders? Dave FX Hunter here, and after a short break when I was developing some quite cool tool, I am back with the Forex market preview as many people was requesting it from me. First I want to speak about this tool. So on my website fxhunterworld.com in the tab COT, just go there and check it by yourself. Click on COT and it will takes you to this quite cool dashboard where you can see the retail traders positions and their percentage exposures with the volume and the history, how is the positions changing. You can of course sort it out as their exposure. So for example, on the Aussie cat you can see the many traders are shorting right now, and you can see as well how the traders are positions. So it can helps you to decide how to trade against them. But if you click to the COT, it will takes you to this beautiful page which my programmer, and I want to thank them with this, helped me to create this. So here what we can do is check uh, all the currencies, and we can change the history, which helps us to change these calculations of the averages, which is quite cool thing. And if we go to the bottom, here we see some another things like these nice graphs with which is in default having the net positions of the commercials and the non-commercials, so you can watch the relationship between them, and you can bring as well the positions longs, shorts, and how is it changing. So it will might helps you to understand it a bit better. I'm finding this very useful currently, and here's as well the shortcuts which you can use for the euro. You click the euro, it will takes you to the euro, of course. All right, so let's go to the charts and let's see what we have here. So this is the euro right now, and as said, okay, let's start with the dollar right now, yes. On the dollar, we can see that the banks, hedge funds, or the large speculators, let me bring the different color so we see it better. So we can see that they has bring the shorts positions, and they has reduced quite big. I mean something like a 10k of their longs positions, which is making the dollar first time in this year, and actually since 2008, bringing it to the negative territory, which is quite interesting, and might many people start to think the dollar is going to be dead. Well, of course it's possible, anything is possible. After what I have seen on the oil a couple months ago, I think right now anything is possible, right? However, we must be cautious because the 16th of this month, which is like 2 weeks ago, there was a contract end. So basically the big large speculators has to do the rollover. They have to close all their positions and reopen them again in the new contract, right? So this is why all of this is happening, and so basically currently in this moment the COT doesn't tells me too much, because what can happen, I don't know how they reopen the positions right now. So they can basically start to, start to be shorting, and do not have to opening the longs, or they can be taking the longs or whatever. So the dollar currently in dollar index currently is not too much saying for me. So I go to do analysis on the specific currencies, and let's see if we see something in here. So this is the euro, and what do we see here on the euro? Euro was moving up on the chart, and we can see the banks has been adding the longs positions, right? Which is my calculation showing it there was a big growth in the long positions, and these changes, which is showing my scoring was growing, and last week it was growing even to the 11. Why was that? It's simply because the dollar, if we look to that period from the last week, I must put it here, so we can see that the dollar has the net change, the minus 10k, and the euro just minus 5k, so which makes it super bullish here on the top. However, as said, we have this contract and we can see the banks has bring slight sorry, they has bring slightly some short positions without not adding too much long positions here on the top. So what I will do right now when I have these informations and when I'm bringing it into the context with the charts is this. I will close this one, and I want to see what the other side is doing as shown in my other tool on the website. So I'm seeing that the net that the retail traders are 31% to the long side, 68% to the short side, which we might think that the price will go up because sorry, that the price might go up because there is a less traders in the long positions. However, important is to know the history and how that happened. If we look, if I click to these candles, this is another part of my tool, so we can see that actually the traders, they has been something around 19%. Here we can see 19, here is 32. On the lower time frame it's possible to see it better, of course, but I don't want to go there right now. What I want to show is that in here was the retail traders in the profit of the average price, here as well, here as well, here as well. So what's that happening? Actually, they are trapping them into the longs positions, right? So the retail traders are trapped in the longs positions because here was the 16% of the retail traders in the longs. Right now we are above the 13%, right? So it's still less than the shorts, but they are trapped in their longs. They don't want to be there. So what will probably happen, these traders who entered on these breakout or whatever, or maybe the break of this whole number where the banks are trading, they will probably have their stop losses down here. And I think what's gonna be happening right now is that the banks will want to take the price down without giving them the chance to get above, or maybe slightly but not much above their average price. So what I will be looking for is the short, definitely for this week, and I will be looking to take the price down here because here will be the stop losses, right? So on the lower time frame, some small correction with the stop loss above their average price, and like that I could have a trade with the 1.77 risk reward ratio, which is pretty nice. So this is what I will be looking for on the euro. Next one is the Swiss franc. Let me bring the Swiss franc here. Swiss franc, if we are looking to the COT, we can see it's for quite some time. There is not any big changes, and it's like 53% to the 47% to the shorts, to the longs. It's not any. This is nothing. This is saying nothing, and we can see it's moving in the range right now. Since 10th June. So let's see what our scoring is saying. So exactly what I was expecting, this big number, which was caused by this big position closing on the dollar, right? But it's not saying too much because we can see, if you look to the total, there is just this total number is the calculation of the average volume. So that is just the 40% of the volume. What does that mean? That means if we look here in this dashboard, we can see that before there was something like 20k contracts traded. Right now just 11k, 10k, right? So there's not much position, not much banks in the trades. So what I could, if I want to decide what to do, I will not be definitely trying to follow the banks, but because they are 50-50, so there's not any clear sentiment. But what I can see is, of course, the retail traders, and the retail traders are actually providing the liquidity. So if we look to the history, we can see again here that the slightly retail traders, they've been in the profit down here, right? So they've been caught immediately after they shorted this break. The price was taken up, then he was doing the support. So what was basically happening probably here is that here was some stop losses, right? The traders was probably expecting it, the price to take up, which probably will be right, because the banks, they never want to keep one side winning, right? They won't always have the sellers and buyers in the loss, and they quite doing it pretty well. So they took the price down again, they give them slight chance to be winning and immediately taking price up. So right now, again, these traders are trapped, and if you look to the two stop losses zones, so that's gonna be like this, and I think these stop losses could be probably hunted, right? So what could happen is this thing. We are right now, I think, going to do this. These stop losses will be hunted here, and I think there will not be too much chance for the traders to get out from their shorts, because if they enter it, if where they entered, probably somewhere around here was their average price. So I think that we don't want to see the price lower than here. Of course, it doesn't mean that I will open on the Sunday. I will sit on the computer on the Australian Open, and I will open the trade like this. I will be waiting for something happening here, right, on the lower time frame. So this is just a pre-plan. All right, but let's see. Next one is the JPY. What do we see on the JPY? We can see that the banks has added. Okay, this is the Japanese yen. Let me bring the USD JPY, so we have it same like on the charts, right? So here on this mine dashboard, you can have USD JPY, or you can have the JPY. So this is the JPY contract. So if you can see that they are adding you can see that this contract is actually getting quite bullish JPY, and if you so that means that it's actually bearish for the USD JPY. So if you go and look to the USD JPY, you will see it's bearish, right? So this is cool. Let me bring it here. So we can see the bearishness here, and not so strong. I mean, let's look at it. So we can see the banks has added some long shorts, but they are not so heavily shorting as before. So right now, what we can see, and we can see it, the markets are for last 2-3 weeks ranging a lot. I think it's because of this end of the contract. So not much saying by the COT, more to the short side. However, they don't have the position, so right now they need to load up the liquidity, which will be provided by the retail traders. And as well, what we see, I think that here was the retail traders trapped. Let's check it. I think that was definitely a trap, because retail traders trading, and you can see it, they trading the breakout, right? So we can see here on these positions, what they did is that they basically traded this breakout, and this is typical fuck up from the banks. When you enter the short here, they will take the price up, and these traders are right now trapped in their shorts, which is perfect for the banks to take the price slightly up right now, because there will be their liquidity, right? So they will take the contracts from them. And as said, that the traders was trapped here, they probably have I'm always looking for the two levels of the stop loss. So it's the one which was taken out right now, and here will be the second one as well. As on the previous two pairs, I'm expecting the price to come up here without giving the chance to these to get out. So I will be looking for the long on this pair this week, and again I will want to see some correction, slight correction, and I think some trade like this could work. As you can see, I'm not giving any big targets currently, as I was doing it in the past, and the reason is the simple. We can see that the banks are trading with very low volume. So if they trading with the low volume, what's that mean? Let's check it. You see there is a 50% of the total volume, then is the average volume of the so there will be a lot of wrenching now. I think the Forex has lost quite volatility currently. So doing just these short-term trades doesn't mean that you make smaller money, but you still can make like 1.38% like on this trade, right? So right now just taking the trade with the 70-80 pips, it's perfect, because making 200 pips on the trade doesn't mean that you will make more. And okay, so next one will be the GBP. We can see the GBP. Let me bring the GBP USD. And change it here as well. So we can see the GBP has dropped quite significantly, and here is what the banks are doing. They really started to be very bearish on the GBP in this quite 1, 2, 3, 4, 5, more than 7 weeks. Right, so the price were dropping. However, right now I would be very careful with entering more shorts. The reason is why, because the price is reaching the level where even the retail traders would be profitable on this trade, which the banks will probably don't want to. So I think that we might see some corrective move here, right? Might see that the price will go to take them out, but this is just a question what's gonna happen next week and how these numbers will be changing, because the retail traders positions are updated every 15 minutes in this my tool, and it can be very different. So what I'm seeing here is the banks are bearish. However, look at this. The price is dropping down. Let me bring this. The price is dropping down, and they're not adding too much longs. I'm too much short. So we can actually see they closing the shorts while the price is moving down, right? So price is moving down, and they taking profit from their shorts. So basically I think what's gonna happen here, and right now actually I understand it and I can see it. So this breakout is when these sellers will probably sell even more, and as they are closing the shorts, they will have the possibility to take the price higher. So if I will see some nice, and I was actually wanted to do it here, if I will, but we close the trade break even. So if I will see some nice price action in here, I will start to look for the long trade with some corrective move. How I will do that is, basically if you do just simply with the Fibo, and you will be looking for the 50% correction, and with some nice entry. that would be very enough uh, to have a good risk reward. Right, of course this is not my stop loss. Yeah, it would be probably something bigger. What I'm looking right now is for the trades with the risk reward around 1.5, 1.3, something like that, not any big targets. So this is the GBP. Next one is the Aussie. Aussie very similar to Euro. So what happened here, price was going up, now it's ranging. We can see that Aussie, so we can see that the banks has closed quite big shorts positions in the last 2 weeks, which was actually which was here and here. So they probably closed these shorts here on these bottoms, right, before they reduce it, before they reported this. So we are not that bearish as we've been in the past, which is quite interesting here on the Aussie. So what's that mean? If the banks wants to go up, so what they will do? They will take it from here? Of course not. What they will do most likely is to where they will buy. If they will buy, someone has to sell first, and where the people will sell is simply here, because here is the stop losses of the buyers who entered in this zone, right? And if below this spike was one level of the stop losses, here will be the second. So what I will want to look for is a trade, some slight retracement, so I will look for the slight retracement, let's say around 38.2, without giving them chance to get out and taking the price down. That would be nice. And what I would like to trade, something like this, quite simple, 1.60, just the 97 points target. And here is probably the stop losses of those who entered here this break, so they put stop loss above here. So boom, they will be out on the stop loss. I will enter and will go down with this price. Alright, so this is for the most of the pairs, and the Kiwi and Cat looks very similar to Aussie, and yeah, so this is what I'm looking for. I will of course do analysis of the most of the pairs during the beginning of the week, because what I don't like to do is to prepare your plan on the weekend and then you know, market opens somehow different, these numbers will change, so everything will be different. So this is just the pre-plan, and to show how I work with this tool, which is right now available for you for the free on my website, and you must log in with the email which is the shared in my Telegram. So yeah, this is my plan. This is the shortcuts which I have here. So this is perfect. Actually, whatever I draw here, it's stored like this in my plan, which I can execute. Actually, okay, I didn't want to say that, but I will show a little bit about this tool as well. So basically this tool is for me to planning the trades, and what is amazing is that it's automatically calculating a risk reward. So I know the risk reward, and it's automatically adjusting the position sizes. Then if I want to enter this trade or activate this trade, I will simply click on this, and the trade will be activated if the price come back to the entry price and the level. What then happen if I activate this number 1? I will receive the notification that trade is activated, which is very cool, because I can plan a lot of trades. Then sometimes some of them I can activate or not, or if I change the stop loss distance, you can see it's automatically recalculating my position sizes. As well, what I have here set up in this tool is this amazing thing that if the price move to the 80% of my target, it will automatically close half of the position and move the stop loss by itself to the break even, which is pretty cool. Alright, but more about this tool I will show later in some other videos. Have a great weekend, my friends. Bye bye.